PepsiCo, stock ticker PEP, is currently trading at $176.58 per share, and over the past year they're up around 4.17%, and year to date down around 1.58%. Now the company has a starting dividend yield currently sitting at around 2.90%, and if we look at that dividend history, we can see they actually recently became a dividend king with 50 consecutive years of dividend payment increases. That's pretty phenomenal. If we look at the 10-year dividend history, we can see in 2013 they were paying out around 54 cents per share, and jump forward to now, it's now sitting at around $1.27 per share. So pretty good dividend growth over the past 10 years. Let's go ahead and look at those dividend growth rates. We can see that 10-year dividend growth rate sitting at 8.13%, the 5-year and the 3-year both sitting at around 6.9%. So overall, pretty decent dividend growth for a company that's been increasing dividend payments for 50 consecutive years. Now the thing we need to look at is the dividend safety. How much of their free cash flow are they paying out in dividends? And if we come down here, we can see the forward-looking cash flow payout ratio sitting at around 55.19%. Now, typically that's a little bit higher than I like to see it, but for a company that's a dividend king, that's honestly a pretty good range to be in. Now, the question that we need to answer is PepsiCo trading at $176.57 a good price to buy in at? And to answer that question, we need to jump into my stock valuation spreadsheet and look at a few different valuation models to see if we can find the intrinsic value of Pepsi. And like always, if you'd like to be able to download the spreadsheet, then you can head over to my Patreon page at the link in the description. Okay, so if we come over here and plug in the stock ticker PEP and hit enter, you can see all of this data will automatically load in. Now, I've already touched on some of these dividend metrics a little bit, but if we come down here, we can see analysts actually have a target price of around $200 per share for Pepsi. That's quite a bit higher than that current trading price. That's pretty interesting in my opinion. Institutional ownership currently sitting at around 74% and a very low beta sitting at only 0.54, so you should see very little volatility with this company. Now, the first valuation we typically look at is Graham's valuation, but I don't think it's a fair valuation in the case of Pepsi. With it being a dividend king, it's typically not the best valuation for those types of companies. Now, if we move forward and look at a discounted cash flow analysis, I'll go ahead and zoom in. There's quite a bit I want to talk about with the discounted cash flow analysis, but let's go ahead and start. Essentially, what we need to do is we need to project what the future free cash flows for the company will look like, and that will give us in the intrinsic value. So I'm projecting a growth rate of around 8.25% for the future free cash flows for Pepsi. I actually think this could potentially be a little bit on the high side, but I'll touch on that in just a little bit. But we then take the present value of those future free cash flows and add them together, add the company's cash and cash equivalents, subtract out the total debt to get their equity value. We then divide by shares outstanding and come to a discounted cash flow price per share of $103.59. That's actually quite a bit lower than the company's current trading price, sitting at $176.57. So why is that? Well, in my opinion, when people buy Pepsi stock, they aren't buying it because they're projecting really high growth rates for the future free cash flows or even the revenue. They're buying it because of the predictability and the steadiness of their revenues. If we jump back over to Seeking Alpha, and let's go ahead and look at that income statement. One of the things you'll see is, yes, they are generating a ton in revenue, but that revenue is growing very reliably, very slowly, but very predictably as well. If you look where they were in December of 2013 to December of 2022, it's not massive revenue growth, but it's very clear that they are steadily growing those revenues every single year. And if you look at where they're at for the trailing 12 months, it's the highest it's ever been. So again, while there might not be a whole lot of growth projected for Pepsi, I think the revenue growth is very predictable and very steady. Now moving forward, we'll be looking at the multiples valuation, and this is essentially a way to value a company based on how the market is valuing companies that are similar in structure. Now, before we really dig into the multiples valuation, I want to talk about Coca-Cola for a second versus Pepsi. This is something we see come up a lot. These two companies are very often compared to each other, and the argument a lot of people make for Pepsi being more attractive than Coca-Cola is how diverse the company actually is. While Coca-Cola is really considered only a beverage company, if we come over here, we can see Pepsi actually has 58% of their net revenues coming from food products, while 42% comes from beverages, so they're actually pretty well diversified. We can see 57% of their revenue coming from the US and 43% coming from outside the US. So the products and revenue mix for Pepsi is quite a bit more diverse than Coca-Cola, which is one of the reasons that people think makes it a more attractive investment opportunity. But in the case of the multiples valuation, basically what we're doing is we're taking the stock price dividing by earnings per share to get the PE multiple. The average PE multiple for these comparables is sitting at around 33, so when we multiply that by Pepsi's earnings per share, we come to an intrinsic value of around $188.82. Now, the last valuation model that we'll look at is the dividend discount model. This values a company based on how much they pay out in dividends and how much that dividend is increasing. So I plugged in the company's quarterly dividend payouts so we can see how much they pay out each year. And this allows us to see our year-over-year dividend increases. And it's been pretty solid lately at around 7%, 5%, 7%, and the most recent dividend increase was a whopping 10%. That's pretty high for a dividend king. That's an average growth rate of around 7.3%. So moving forward, I'm projecting a dividend growth rate of 5.5%, discount rate of around 8%, and that gives us a dividend discount model price per share of $213.53. So from a dividend discount model perspective, this company is actually valued pretty high. So when we jump over to our output tab, we can see the three valuations that we used. We have DCF at 103, dividend discount model at 213, and multiples at 188. When we average those three together, we come to an intrinsic value of $168.65, which is a little bit lower than that current trading price. So with a 10% margin of safety, you could see our acceptable buy price sitting at around $151.79, meaning it's not quite in that buy range. Now, I think what you could make the argument is that this is definitely a company that trades at a premium. Whenever you see companies like Microsoft, Coca-Cola, or Apple, companies that are very stable and have very predictable growing revenues, those are companies that are typically going to perform better during recessionary markets, and they will therefore trade at a premium. In my opinion, that is the case with PepsiCo. People are willing to pay a premium for this company due to the fact they feel like it is a much safer and predictable investment. They obviously have very steadily growing revenues like we pointed out, and the dividends have been very predictable for the past 50 years now, and they've done a pretty good job of increasing those dividend payments over that time period. As for me, I don't personally own Pepsi in my portfolio, and I don't plan on adding it anytime soon. I personally think I can find better opportunities in the current market. But there you go, there is a quick analysis on Pepsi. Go ahead and leave a comment down below and let me know what you think of this company. If you'd like to be able to download this spreadsheet and join a community of dividend investors, then you can head over to my Patreon page at the link in the description. So with that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.